So without further ado, one of our great speakers, Sümer, is here with us from Allianz X, one of the biggest funds in the world. So Sümer, welcome. Can you hear us well?
Hi, Khan. Thanks for having me. I hope
Perfect.
you can hear me clearly.
Yes, we can. And what I'm going to do is I'm going to turn off my screen share so you can actually have your own pitch deck. If you want to do it, you can. Perfect. Now, I think people will.
Do you see my screen?
Yes, now I can see it. So I will leave the stage to you. I will be back at the end of it. So good luck. And I'm sure that I will be a nice audience for this. I'm really expecting great stuff from this presentation as well. Good luck. Bye-bye.
Thanks a lot, Khan, for this nice introduction. And also a warm welcome from my side to all guests and participants. My name is Sümer Uysal, and I'm responsible for the FinTech and Wealth domain at Allianz X. And today I will share some insights in my presentation of the FinTech sector and especially the emerging trends in the FinTech industry. Maybe to start with, I would like to give a bit more background on Allianz X because maybe there are some participants who don't know us yet. So Allianz X is the venture capital arm of the Allianz Group. And our mandate is to identify, invest, and work with high-performing startups that are relevant to the insurance and to the asset management ecosystem. So our focus is on growth stage, more late-stage startups with proven business models, and also with imminent use cases, which allows for strong strategic potentials for the Allianz Group. So what we look at is not only financial return, but also strategic value add for the Allianz Group and for the Allianz entities. So in that context, we are also supporting the digitalization and transformation journey of the Allianz Group. I wanted to start my presentation with the Chinese words. It's the word crisis. It bears or it encompasses two meanings. One is danger and the other one is opportunity. This is usually said right before or after making a remark that the crisis can also be a possibility. So we all experience difficult times throughout this pandemic, and still we are experiencing it. And this brought a lot of challenges, but also challenges contain opportunities at the same time. And this is a bit also the understanding and the philosophy I wanted to reflect in my in the structure of my presentation today. In the beginning, I will start with the COVID-19 impact and the implications for the FinTech industry. But moreover, I will also talk about the emerging trends and opportunities for the FinTech players. And then I will also talk about regional differences because we are not talking about the one and only FinTech industry, but we see differences in regions. For example, in Asia FinTech market, there is a lot of interesting things going on. So I will elaborate a bit in terms of technological differences, customer behavior differences, and also last but not least, I will touch upon the regional developments, the regulatory developments, because regulation plays an instrumental role in the development of the FinTech industry, the ecosystem as a whole. So starting with the FinTech industry, Khan gave already a good introduction on that. The year 2020 recorded a funding volume of 106 billion USD. And in terms of deals, we saw 2,861 deals in total. The sector received 80% of total FinTech funding in the last decade. But right now, the resilience in certain verticals is being tested, especially through the COVID-19 and there is a lot of uncertainty. So we saw, for example, VC funding fell by approximately 40% in the last year and 20% in terms of deals. In Q1 2020, in China alone, the VC funding fell by 50% even. Of course, the COVID-19 hit had the biggest impact on early stage startups, which we have experienced. What I mean by that is seed to Series B stage startups. They suffered the most, and their funding fell by nearly 50%. So it's halved basically when we look at 2020 versus 2019. M&A activity decreased as well. So cross-border buyers pulled back on spending. There is a lot of uncertainty from the funding side. The startups are experiencing also tough times. They had to go with workforce reductions, for example. Then their revenues fall by 70% in the beginning of the pandemic, and then throughout the last year, it averaged a decline of 30%. What does it mean? It means that the fund sides, the investors will have a more closer look and more selective approach. So this means that the business models need to be robust than ever, and unit economics especially plays a crucial role this year and will also play a crucial role in the upcoming years. What is interesting to see as well and to note, the corporate venture capitals as a segment is expanding. So we have around 1,000 CVC funds out there at the moment, and this is also increasing in number, which shows the strategic appetite of corporates and strategic interest in fintechs and in partnering with the startups. So when we look at the trends in the fintech industry, we see that the pandemic and the COVID-19 had an impact on the acceleration of digital adoption, of course. Just last week, I had a discussion with my dad, and he asked me to set up Apple Pay on his mobile phone. So when we talk about digital adoption, we shouldn't think only of the younger segment, but also the elderly and the older segment in the population, where we see acceleration of digital adoption. So this will also increase the demand in e-payments and contactless banking solutions, and radically shifting customer behaviors towards e-commerce usage and e-commerce platforms. What does that mean? It means more ground for buy now, pay later players, what we call BNPL. So this startup segment, the funding of BNPLs grew by a CAGR of 90% in the last 4 years. I will spend in the next few minutes more on the BNPL sector. Moreover, digital banking was a trend and is still a trend in the fintech industry. We see more and more regulations issuing digital banking licenses, but also digital banks or so-called neobanks or challenger banks, like Khan named them before, are disrupting the business models. They're improving the customer experiences and processes, but they are lacking a bit the perception of trust and stability, which the incumbent banks worked out or benefited from throughout the last decades. So this is something where the digital banks still have to work on. It's not just enough to capture the young digital segment, but it's important to hold them and to meet their growing financial needs and demands and these expectations going forward. So maybe to look into the wealth management ecosystem a bit closer, we see that next to robo-advisors, millennials drive interest in social investments. ESG scores are becoming important. So ESG-focused startups will become more and more strategic acquisition targets. Then the API infrastructure, of course, is helping as softwares for wealth managers to gain traction in this field. We see also a lot of movement in banking as a service or tech as a service providers gaining more attention and traction here. But we see also players from non-banking industries like WhatsApp. They are planning to roll out a micro pension product on its platform in India, for example, with a pension partner. This is interesting because we see a trend that non-financial or non-banking industry players are also interested in penetrating into the wealth management sphere. Then in capital markets, we see definitely the trend of digital asset solutions and algorithmic trading. There is a rise of mobile brokers in Europe. The savings rates have increased by 10x during the lockdown period. This is a fashion which will also continue in the post-COVID era. There's definitely more to see in that sense. Cryptocurrencies, stable coins continue to gain attention. JP Morgan just recently launched their own coin. Regulators are exploring this field as well. For example, Hong Kong and Singapore developed their regulatory frameworks and licensing regimes for virtual asset providers. Then China forged ahead with their testing of its central bank digital currency. Other central banks are also exploring in this field. European Central Bank, the Federal Reserve, they are all working on the framework and the requirements for offering central bank digital currencies. So this is something to watch for in the next 2 years. Then Visa just recently did the first US dollar-backed stablecoin settled transaction via Ethereum. So what we see here is the bridging worlds of digital and traditional fiat currencies is happening. And to bridge this gap, of course, regulation needs to be in place. And this is an emerging field where we should have a look in also in the next years. For those ones who don't want to invest in cryptocurrencies, they can invest in nowadays in Bitcoin ETFs. So one of our portfolio companies is listed here. It's Purpose Financial. They recently launched the world's first Bitcoin ETF in Canada. Then in terms of payments, so I have already mentioned the BNPL, buy now, pay later players. BNPL and the SME segment are definitely one of the winners out of this pandemic situation. Because BNPL right now accounts for a small portion of overall card spending, but in the next 5 years, it is expected that this industry will grow by 10 to 15x of its current volume, reaching a $1 trillion USD industry in terms of annual gross merchandise volume. With BNPL, we have to say that it is popular among millennials and Gen Z shoppers. Like we see players like Klarna disrupting this business. Again, API infrastructure plays a crucial role in integration in the checkout processes of this e-commerce platforms. And this is enabled by the PSD2 regulation. Again, regulation plays a vital role here. So BNPL companies, they charge 2 to 3 times higher merchant fees than traditional players like Visa and MasterCard would typically charge. But in return, they drive increased sales conversions for merchants and repeat purchases, while they are lowering the user acquisition costs. And these are the critical points in their business model to mention here. But nevertheless, payment facilitators are also ramping up their efforts to compete with BNPL players. So traditional players like Visa and MasterCard also have both partnered or acquired companies to grow their BNPL capabilities. Maybe also to look at the regional differences a bit, as I mentioned Asia earlier, the Asian FinTech industry is also an interesting one when we compare it to Europe, for instance. We see in terms of mobile payments, China is spreading faster than the Western world. This is because so many people are switching from directly from using cash to paying via smartphones. So China, in a sense, is leapfrogging the intermediate steps, and this gives China an advantage in terms of mobile payments. So mobile payments penetration rates is above 32%, is at 32% levels in China, whereas when we look at US, it's at 15%, so half of it, and Europe is at 13%. This gives Asia a robust and good digital savvy customer base. And here we see the fintech adoption rate is at 87% in China versus 67% in Germany. So I think this speaks for itself. We have tech-savvy population in this region, and also consumers adapt faster to fintech services and fintech solutions than in Europe. But there is also a huge unbanked population in this region. I think over 700 million people, they lack the financial inclusion in the Asian region. So this is also an opportunity for fintechs to serve the mission of financial inclusion and to do that via their technological services to integrate this unbanked population to have access to financial solutions. Maybe a couple of words also on the technological differences. So in Europe, we see that fintechs are serving e-commerce or focus on payments or CRM management, invoice purchasing, you name it. But they are focusing mostly on a single business. But whereas in Asia, we see a trend or a pattern that fintechs are also including social media and peer-to-peer payments and communications all tied together into one place. I think the best example for that to name is WeChat, where you can buy your tickets as well as manage your social media in one common place. This is a huge difference in terms of customer behavior patterns when we compare EMEA region with Asian region, for example. Maybe as a final note, in terms of IPO activity or the emerging trend of SPACs, we will we expect also significant IPO activity in the next years. When we consider especially last year, 5 out of top 10 tech IPOs came out of China, and this is also a clear message that there will be IPO activity expected in this region. Maybe some final words also on the regulation side. So as I mentioned earlier, PSD2 directive, which was instrumental and opened new gates and opportunities for the API infrastructure and solutions of the fintech players. Moreover, ESG risks and capital requirements will play a role in Europe, and increasing materiality of data privacy and KYC transparency issues will drive further regulational technologies, or what we call RegTech solutions, will play a role in the upcoming years. Then we see also positive signs in the Middle Eastern region. Governments and regulators are embracing a fintech-friendly culture there and putting in place measures and instruments to foster the ecosystem further. When we look at Asia, Singapore, Taiwan, Hong Kong are quite active, the regulators, in terms of issuing digital banking licenses. In Singapore recently and in Taiwan, 2 digital banking licenses were issued. This number is already 8 in Hong Kong. So we will see more and more that digital banks will eat from the pie and gain more share from the revenues of traditional banks in that sense. Then China is a rapidly growing fintech sector. And we see that the Chinese regulator also continues to add more oversight and measures putting into place in terms of regulation for the fintech sector. They recently introduced the minimum capital requirements for payment platforms, and also introduced some new regulations for the online micro lending segment. Yeah, with these final words, I would like to thank you. I hope I was in time. I had 20 minutes.
No, you were really on time. Don't worry about it. I really appreciated it, by the way. I mean, if somebody wants to have a question, it's the right time. Thank you, Sümer. I will ask you a few questions. I mean, one of the things that I really like in terms of technology is this technological leaps, right? Like 15 to 20 years ago, countries like Turkey, Brazil, we didn't have computers. And what happened is everybody from these developing countries have a mobile phone because we had this leap. And this is what we see in Asia. Now, nobody had the bank before. Now they have WeChat. I was really surprised, like 3 years ago, I guess, in countries, airports like Switzerland is one of them, where they have a lot of Chinese travelers. I started to see we accept WeChat, and it was, what was WeChat? I mean, I was really into someone. I mean, of course I knew it, but WeChat was a chat. So why do they accept like WhatsApp in their payments? And then I realized that their payments are going skyrocketed, and this is what we started to see so far. So how do you think that it will affect like Africa as well? Because also another big portion of the world, which is unbanked, a lot of fintech companies that we are discussing are trying to tackle Africa too, because they don't have the infrastructure.
Yeah, definitely. I think that's a good point. I mean, maybe also as Allianz, I mentioned Asia and also Africa is one of our strategic growth markets there, and financial inclusion plays a huge role. So we have a huge population and a huge potential where the fintech players especially come into play, and they can bridge this gap for this potential and for this population to provide them the financial services. I think technology is a key enabler for that, and we will see more and more activity there. Africa needs this attention and deserves this attention, and fintechs, as I said, also for Asia, in terms of unbanked population, they are serving actually a huge mission for that, also for human beings, that they can help them to integrate these people into the financial world and help them with microfinancing solutions, also with micro-insurance solutions. What we do also with BIMA, for example, which is also an Allianz X investment, to provide them with these micro solutions and to enable them the financial services.
Yeah. I mean, it will be an interesting future to see, and I feel really weird because like when we started in 2015, of course, like the one of the most interested segment that we had was banks, because they had a lot of resources. Like 2000s was good times for banks because they accumulated a lot of money, and also they started to do technology, and they were really interested, and everybody was talking about, oh, fintech is so regulated. And now we see regulations happening every day in every country, like PSD2s, open innovation. You are adding your bank account to another bank's mobile app. It's crazy. I mean, everybody was saying that it was hard to tackle. This is not Facebook we are talking about. This is real money. And at the end of the day, we also see that Facebook is enabling people to send money as well. And this is really interesting for me.
Exactly. And it's interplay, right? So fintechs are challenging, right? The name, as the name says, is challenger banks. So fintechs are challenging, they're penetrating, they're disrupting, they're bringing noise into the industry and new thoughts. And then the regulator, the regulation also has to come up with solutions and the right framework. So it's an interplay. They have to throw the ball to each other, and it's an interaction and interplay in order to bring up a healthy ground and a healthy shape for the industry. So it goes hand in hand. Yeah.
I mean, Paul just asked a question. I think we a little bit covered, like he was asking, do you see a trend of disruptors from big tech companies like Amazon in the insurance space?
Yeah, that's a classical question. Which, maybe we can do the following. We can collect
on insurance
the questions and then I will try to address.
Perfect. You can actually write
after the meeting.
It is in the answers section, so basically you can write lengthy answers as well. Perfect. I think that will be fine. And also Mehmet also asked about Islamic finance market and fintechs in EMs. So it is an interesting question too. I mean, I've seen some blockchain solutions because of the way they approach interest and regular, for example, EFTs. So it's interesting market. There's a definitely different approach to it. So I don't want to take a lot of time, but there are some questions. If you want to go through, I would be more than happy. If you want, you can just turn off your screen sharing. I think it's beautiful. Maybe we will have you like maybe in 2 to 3 months to discuss some things in further, honestly.
Thanks for having me. Thanks again.
It's a pleasure.